Hello and welcome. I'm Suno. It is 4:34 a.m. South African Standard Time, and today we're going to look at intraday chart update of gold, silver, as well as natural gas. So I've already, prepared pictures for you here. This is just going to be a short video, unlike the ones that are normally long. You find that 17 to 20 minutes long and barely 10 minutes, but this one should be just below that. So looking at in front of us right now, we have a chart of silver against the United States dollar on the 4 hourly time frame. So you all know that the ticker symbol for silver is XAGUSD, and we're using FXCM as our data vendor. So you can see from this low right here, which is 26.364 USD, we had our bottom right there for the current rally that is still unfolding. We completed our wave one of the minute degree, which is degree 11, as well as wave two. So currently, I believe we're in the third wave. That is, we have completed wave one of three. This is not wave three of the same degree as this wave right here. That is, this is sub-minute wave one and then wave two, and we're currently in sub-minute wave three. Reason I'm saying that is because if you look at here, this price, like the high of wave one, that is to say, we closed basic. In fact, we reached a high of like 30.177 USDs. And then if you look at the decline from this wave one right there, which is of sub-minute wave two, we actually, entered, 30, we entered this price area right here, which is 30.102 USD. So you can see that there's kind of an overlap, of which if this would be 1, 2, 3, and then 4, there would be a violation of the Elliott Wave rules. Not unless then, let's say, we had a flat combination for wave 4. That is to say, this is ABC of W, and then we're currently in wave X to the upside. And then the following flat, which is wave Y, or, if we continue further to form our wave Z, it will close above this price, then that is acceptable. But I want to believe that this is 1, 2, and then 1, 2, basically a wave extension. The third wave in this case, I believe, is going to be extended. So the next chart is that of gold against the United States dollar, the same data vendor. So if you look right here, we have our wave one of the minute degree, which is degree 11, and then wave two. So I believe we're currently in wave three, and you can see this is sub-minute wave one, sub-minute wave two, which bottomed right here at 2364.03. And then we kind of, completed. In fact, we haven't completed the third wave of the sub-minute degree because we only saw wave one, wave two, and then five waves to the upside to form our third wave. And then we have our fourth right here, I believe. But chances are this might not yet be the fourth wave, given that this is, wave four. I mean, what I'm trying to say is that this might not be the completion of our wave four, because if you look at it, in as much as it was a zigzag and then our wave two was sideways a bit in nature, though it's kind of a sharp correction, that is to say a double zigzag with a truncation, because we failed to take out this low. I believe we ended exactly there. You do see some kind of alternation, even though these are both sharp corrections. But wave four, there's a possibility that this can be a flat combination, or we can go further to say this is a triangle. That is, we have wave A for a triangle, we are currently in wave B. But looking at the nature, I don't think we have that yet. And also we have an extension. So once we take out this high without a possible formation of, let's say, zigzag, I will believe that we have wave five to the upside. So I'm waiting right now that we continue to go to the upside and then find kind of support on this trend line right here, because remember, we have already broken this trend line and closed above it if you look at that bar right there. So I think we're still going to push to the upside here in this case. And then looking at the last chart. Oh, by the way, before we move further, to natural gas, if you look here, we have alternate, which is wave five, and then this is alternate wave four. Look at the bracket that I used here. It's kind of like indicating to you that it's of a greater degree, and also the color is green, whereas here the color is purple, and if you look, it's just a normal bracket. or which is a V, or in other words, in terms of our wave decrease, this would be minute degree, not the minute degree, but the minute degree. So in this case, I want to believe that this is wave 5 of wave 3, hence we have wave 4 right here. But I just use, wave V so that I would understand that, okay, if this is 5, that means there's a completion of an impulse, a bigger impulse, and then this is wave 4, which is correcting that. But because of how brief it is, just as here in this case, look at our wave 4, it's nowhere near, this price territory of the previous fourth wave of one lower degree, which is why I want to believe that, well, might not be done, but as long as we stay above this price right here, which is 2601.81, I believe we're good here in gold. But once you go below that, it will mean that we're still in wave 4, and we are going to retrace deeper at least and reach this price level right here. And then moving to the last, chart. Oh, again, sorry for the last time. So some of you might be confused as to what is happening here. We have like a lot of possible wave counts. For example, this can be W, this can be X, and then this can be a triangle, that is it's gonna be wave Y. And then someone might say this is 1, 2, 3, 4. I wouldn't agree to that much, because if you consider the guideline of the right look, this wave 4 would be much bigger in relation to this one. And the time it took, it's possible, but a bit, disproportionate. Also, if you look at this one, someone might say this is 1, 2, 3, and then maybe our wave 4 ending right there, and then wave 5. Highly possible, because wave 4 in gold has a great tendency to be, a vertical move. As you know, in the stock market, there's a great tendency for wave 4 to mostly be crashy. As you can see here, this is your wave 4. It's vertical. It's like a normal thing for wave 4 to have, vertical declines in the case of a bull market. So moving to the last chart, just as I promised you, which is our natural gas. As you can see here, oh, it's covered by this. I don't know. This looks like a person who's been beaten and lying down on the ground. But this is wave 2 of the minute degree, which is degree 10 following minor degree, or the degree that is, below, minor degree. So it's green right there. And then, of course, it was a wave 2, which is kind of a clear zigzag to the downside. So since then, we saw 5 waves, which is, by the way, still unfolding, because this is an expanding wave 1, like expanding, leading diagonal wave 1. And then this is wave 2 right there, which is so brief, which even failed to take out or even reach the extreme of, the fourth wave. That's normally where, of course, wave 2 finds its support. But, we continue to push to the upside, given that natural gas has been in a decline for too long. So right now, the bulls wanted to take charge. So we pushed, in a form of 5 waves, and we even saw a price gap, which we call the acceleration gap, because it's found within the third wave of a third wave. And you can see this is 1, 2, and then 3, 4, and then we have 5 right there. Third of a third of a third. I'd say that. It's a third, of a third. That is like this one right here. And something good. That's all you have to know. And then we declined the fourth wave right there. And I did forecast this, for some time. I've been saying we're likely to hold around this level. Why is that the case? Because our first wave of the dead was extended. As Jeff said, that most of the time, wave 1 within wave 3 will be extended. And that's what we saw. So according to Balan in his book, in the case whereby wave 1 is extended and then wave 5 is far more smaller compared to the third wave, you'll find that the decline that will follow will often find support around the level of the second wave of one lower degree. So that's what actually happened right here, finding our kind of support at 2.558 USD, as you can see right there. So I think we're going to push higher. I want to believe this is my wave 1, and we have this, A, and then B, and then C decline. So this one shouldn't take out this low. We should just continue to push to the downside. But we might expect a triangle, though I don't want to say that, because if you look already at the size of wave 2 in relation to this one, our wave 4 is already greater, and that's what we want to see. I applied the Kennedy timeline technique. We missed by an inch, the first type, that I normally use, which is the KTL minima as well as the KTL maxima. So If you look also this channel right here, this is the Kennedy base channel, which you apply by connecting, the beginning of wave one, which is right there, as well as the end of wave two, which is right there. And then you draw a parallel line of that, and place it at the end of wave one, just as I did. So this one is so good at forecasting the possible points where wave four will find support. And as you can see, we did, predict successfully using this technique the bottom of the fourth wave, which was, around this price right here. So I think looking, next week, our natural gas, gold, and silver will be extremely bullish, but I will continue to make updates. I'm busy these days. I'm like really, really busy, but I will find a way. In fact, I'm trying to find a way so that I can be more active on the channel again. Well, ladies and gentlemen, I don't know, what is going to happen next, but I want to promise you that I will be there. I will keep updating. Have a good one.